This isn't just Washington drama, this could hit your wallet. Right now, a political standoff is colliding with the U.S. economy. The White House is accusing Senator Thom Tillis of holding the American economy hostage, and the fight centers on. Press Secretary Karoline Leavitt says Tillis is refusing to support President Donald Trump's nominee to lead the Fed unless the administration drops its investigation into current Fed Chair Jerome Powell. Markets and businesses watch these signals closely. Any delay or political pressure around the Fed raises concerns about independence, and that can shake investor trust fast. And that uncertainty doesn't stop here. Because overseas, another major power is responding to something President Trump just said. Iran has denied receiving any so-called ultimatum from the Trump administration regarding negotiations. This comes after Iran's supreme leader issued a warning, and President Trump responded by saying he's hopeful a deal can still be reached. Trump's message was measured but firm. He said Iran's tough language was expected and added that if a deal happens, great. If it doesn't, the consequences will reveal themselves. Diplomatic signals like this move global markets, energy prices, and geopolitical risk sentiment. Even without formal ultimatums, the tone alone keeps investors on edge. And that tension is already showing up somewhere. Very specific in the price of gold. Gold just blinked, and trade is noticed immediately. After record highs, the shine is fading fast. Gold prices slipped to a 3-week low during early European trading, falling below $4,550 an ounce. When confidence in U.S. institutions rises, gold often loses momentum, and that's exactly what traders are reacting to right now. But Warsh's name doesn't just affect gold. It's reopening a much larger debate inside the Federal Reserve itself. Kevin Warsh isn't just back, he's reopening old wounds at the Fed, and markets are paying close attention. Warsh's return has shifted the conversation away from short-term interest rates and straight toward the Fed's massive $6.60 trillion balance sheet. Markets are uneasy about Trump's nominee for Fed Chair, Kevin Warsh, and what his leadership could mean for interest rates. There's also growing anxiety that the Federal Reserve could face political pressure to cut rates faster, threatening its independence. That fear has already weakened the US dollar and fueled last year's surge in gold. Now, it's feeding into stock market volatility and renewed worries about a possible AI-driven bubble.